we looked at how the accounting entries are passed in the books of drawer or in the books of drawee, and what is a bills receivable, what is a bills payable, and what are the options available to the holder in case of a bills of exchange, whether the holder retains it or gets it discounted from the bank or passes it on to the endorsee. So now let us take a look at a practical illustration and solve and pass on the journal entries in the books of accounts of A and B as a drawer and drawee, and so this will give you a clarity which will make your concepts clear as to how such accounting entries should be passed and how you have to evaluate the discount or how you have to pass on and settle the accounts once the bill is accepted or once the payment is done in the case of bills of exchange. So now this particular illustration says that on 1st of April 2017, A draws a bill on B for rupees 1 lakh. 3 months is the tenure of the bill, right, after the date. So after 1/4/2017 plus 3 months, that means May. So 1st April, so from 1st April to 1st of May, then 1st of June, and then 1st of July would be the 3 months plus the 3 days grace period. So that comes to 4th July 2017 would be the 4th July 2017 would be the due date of maturity, right? So B accepts the bill, signs on it and returns to A. So the bill has also been accepted by B. Bill of exchange has been accepted. So pass necessary journal entries in the books of A being the drawer of the bill, right, and B being the drawee. Right, in the books of A and B, pass necessary journal entries in each of the following cases. In each of the following cases, that is, so number first is that the bill is held by A till maturity. The bill, second situation is the bill is discounted with bank on 4th of April 2017 at a discount of 6% per annum. And the third situation is wherein the bill has been endorsed to C to make a final settlement of a due of rupees 1,05,000 on 1st of April 2017. So in this particular illustration, what you have to do is you have to, in the books of a drawer, in the books of drawee, from the start when the bill is accepted till the date of maturity, you have to pass on the journal entries in the journal book. So what is the format of the journal? So we'll one by one solve these. On the case-to-case basis, we would be passing on the journal entries. So first case is, so the case 1, the bill is held by A till date of maturity. So first, we're in the books of A, we would be passing on the journal entries, right? So on very first day, so that is on 1st of April 2017, the bill has been drawn by A. So we would be for bills receivable account, because such bills in the books of drawer would be the bills receivable. So bills receivable account would be debited and to the drawee. So drawee account would be credited. So to B's account, and the amount is going to be 1 lakh. Right, so this is the entry which has been passed on once the bill has been accepted by B, and thus this accounting entry in the books of B would be, so if we want to see it simultaneously here, in the books of B, that is the drawee, what will be the journal entry in the books of the drawee? So date, particulars, JF, debit side, debit and credit. So on the same date, the date would be 1/4/2017, and the entry would be, so now this is here in the books of A, it's bills receivable, the bills of exchange, because bill is being received, so the bill has to be received, so bills receivable in the books of A, and here such bill of exchange is to be paid by the drawee, so it becomes the bills payable in the books of accounts of in the books of the drawee. So bills pay. So drawer account would be debited. A's account debit to bills payable account, and thus it would be with the amount 1 lakh. So since the bill has been held here till maturity, so there won't be any as such any adjustment entries that need to be passed on related to any discount or a final settlement or a rebate. Here only we will be, since the bill has been held by A only till maturity, so the only entry that would be now passed on would be on the payment of such bill, which will happen on, as we have seen, on 4th of July 2017. Such bill has been paid by B. So here it would be bank account will be debited and bills receivable account will be credited. So two bills receivable. So because the payment is being received, so bank account is debited with rupees 1 lakh. And bills receivable account, as we had debited, because this bill was supposed to be received on the due date of maturity, which has been now received, so bills receivable account would be the impact would be reversed, so therefore credited bills receivable with amount 1 lakh. All right, so it could be either bank account or a cash account, depending on the mode of payment through which the bill is being settled. If it is being settled by payment of way of a check, then the bank account would be debited, and in case the cash is being received for the settling of the payment, then cash account would be debited. And here here also on 4th of July 2017, the final accounting entry would be passed, wherein bills payable account will be debited and cash account would be credited with rupees 1 lakh. It is not required that you just simply try and cram those journal entries. You need to understand why such entries and why such impacts are being given. So like in here, the bills receivable was created as this bill was supposed to be received after 3 months of the due or on the date of maturity. And as and when on the date of maturity, when the amount came in, so bills receivable account was nullified with this impact, because there is no more dues left in that particular bills of exchange. And as the payment is being received in cash or in in the form of check, because the payment is being received here, so thus therefore we are debiting the account. And also now here the impact in the books of drawer would be that the cash is being received. In the books of drawee, the cash is being paid, so therefore we are crediting the cash account to cash account credited. And because the bill of bills payable which was supposed to be paid has now been paid, so therefore we would be nullifying the impact of such bills of payable, thus by debiting the bills payable account on settlement of that particular bill of exchange. So This is how you should try and solve your illustration and pass on the journal entries by understanding the conceptual part or the analytical part behind it, not just simply learning as to, okay, on the date of maturity, this is supposed to happen, why it is happening. Understanding that is more important, as this will help you in retaining the concept, and solving of the questions would become much more easier once the concept is clear, once you know what should be the next step in the case of, once the bill has to be created in the books of accounts, or once the payment has been done in the books of accounts of a drawer or a drawing. So now the second case says that the bill has been discounted with the bank at 6% per annum. And the date on which such bill has been discounted is 4th of April 2017. So that is exactly 3 months before due date of maturity. Right, because we calculated the due date of maturity, which came out to be 4/7/2017. So now, in order to ascertain what would be the discount that would be provided, discount charged by the bank would be, so the discount charges on discounting of this particular bill would be rupees 1 lakh into 6% into 3/12, which comes out to 1,500. So this would be the amount that would be charged by the bank in order to discount that particular bill of exchange. So how we would be passing on the entries in the books of A and in the books of B. So this discounting entry, so the first entry that we passed in case 1 would remain the same, wherein the bills receivable is being created in the books of A and bills payable is being created in the books of B. The entry will be same. We are referring to, so the entry that we are referring to is that this particular entry would be the same in the case of all 3 cases, as in for before discounting of the bill, such entry shall be passed on in the books of A. Likewise, this particular entry shall be passed in the books of B. So this entry would be same in case 2 as well. And now moving on, that once the bill is discounted, what should be the entry on maturity? So now in the books of A, since the bill was discounted on 4th of April 2017, so here, what would be the entry that we would be passing? So bank account, bank is discounting that particular bill. So bank account is going to be debited. And then there are discount charges that are being pressed by the bank to the drawer. So such discount charges will again be debited as they become the expense of the drawer. Debit to bills receivable account. So we would be crediting as the bills receivable on 4th of April 2017 itself. The settlement would be done as the bank would be providing the cash to the drawer at that particular point of time itself, because the bill is being so, and the bill would be kept by the bank and held by the bank till the date of maturity. So here the discount charges that we have calculated here would be debited. So this would be 1,500 right? And 1 lakh minus 1500, that is 98,500 would be the payment that the bank would be providing to the drawer after after subtracting the discount charges, and the total amount thus becomes thus gets credited, that is 1 lakh would be credited, and bills receivable account will thus be settled like this on the discounting of a bill of exchange through bank. So this is the adjustment entry that would be passed on 4th of April. So you have to you have to make sure that the dates that you're entering are also correct, and this for that you will have to refer the question. So on the date of the discounting of the bill, since the drawer would be receiving the entire amount after paying off the discount charges that are charged by the bank from the drawer, so therefore we would be nullifying the bills receivable account, and the discount charges would be debited. So and bank account again of that particular drawer would be thus debited, and the amount would be, final settlement amount would be received on the date of the discounting of the bill. However, in the case of the drawee, that is B, in the books of B, there would be no entry that would be passed on 4th of April. On the date of maturity, the entry that would be passed, so on the date of maturity, on date of maturity only, the entry would be passed in the books of B, that is in the books of drawee, and such entry would be on 4th of July 2017, bills payable account would be debited to bank or to bank account, and that would be 1 lakh. So that's in the books of the drawee. The payment of this bill of exchange would be settled on the date of maturity itself, and bills payable account would be debited, and the bank account is going to be credited. And such payment that is made in the books of the drawee, and this payment would be received by the bank as the bills receivable of the drawer has been settled on the date of, that is on the date on which the bill was discounted by the drawer, that is 4th of April itself, and therefore this particular payment would be received by the bank which discounted that particular bill of exchange in the books of A. In the case 2, we have seen that how bill has been discounted with the bank, and how the payment or how discount charges have been calculated, and then in the respective books of the drawer, how the entry needs to be passed and on what dates, and how on the date of maturity we would be passing on the entries in the books of drawee. On the date of the bill of exchange, when the bill was discounted with the bank, no such entry needs to be passed on in the books of drawee, as the holder is the one who is discounting or getting the bill discounted from the bank, and drawee has no role to play in that. So the payment would be done by the drawee on the date of maturity, and such payment would be received by the bank which has discounted that particular bill of exchange. So case 3 is, bill is endorsed to C to make a final settlement. So final settlement of a due. So C is the creditor of the drawer, and in order to settle that credit, that is the credit which was due was of rupees, of a due of rupees 1,05,000 on 1/4/2017. So on the same date, the drawer endorsed that particular bill of exchange to C, and thus made a final settlement of the due, and the due was of rupees 1,05,000. However, the bill that is drawn is of rupees 1 lakh. So in that case, the difference, that is rupees 5,000, would be referred to as the rebate which is provided, rebate or the discount which has been received on settling the final on settling the due that was of rupees 1,05,000. So thus, how will we account such endorsement in the books of accounts? Let us just start doing that. So in the books of A and in the books of B, the initial entries would be passed on like we discussed, that is, bills receivable account would be debited and to B's account. So likewise here also in the books of B, that is in the books of drawee, A's account is going to be debited to bills payable account, and same entry has to be passed in the case 2 also, although we did not mention there, but it has to be passed, and then we come to the final settlement of how such bill is further endorsed. So these would be the initial entries, and further once the bill is endorsed to C, in that case what would be the next entry? So on 1/4/2017, since C's account, the C is being endorsed, or the final settlement is being made through C, so we would be debiting the account of C to the bills receivable account, that is, so C is the creditor, and in order to settle the account of C, so we would be debiting C's account, and bills receivable is being endorsed to C, so therefore bills receivable account will be credited. And again, since the settlement or the due which was there is of 1,05,000, bills receivable is of rupees 1 lakh, is of rupees 1 lakh. So the discount that is given to A on final settlement is to discount received rupees 5,000. So final settlement of dues to C. And now again, such entry is not going to be a part of the books of a drawee, because because Mr. C is the creditor of A and has no connection with B. So the only entry that would be further on passed in the books of B would be on date of maturity. That is 4/7/2017, the same entry that we did on date of maturity in the case of bills discounted would be passed on here, that is, bills payable would be thus settled, bills payable account debit to bank account and amount paid at maturity. Right, so bills payable account would be debited and bank account would be credited. So here I've passed on the entry. However, in the journal we would be mentioning it in the same format, that is in this particular format. So in the journal we would be passing the entries like in the second case we have passed on the entries in the books of drawee, that is date, particulars, journal folio, debit and credit. Bills pay on 4th of July 2017, bills payable account is going to be debited and bank account is going to be credited. So this is again amount paid at date of maturity. So hope this is clear as to if a question comes in your paper, you need to make sure, you need to understand that how first we will create a bills receivable in the books of drawer and in the books of drawee, how we will be creating a bills payable account. And after that, depending on the condition that the holder would exercise, whether he is retaining the bill of exchange till the date of maturity or whether he is discounted that particular bill or whether he is endorsing the particular bill, according to such such situations, we would be further passing the entries in the journal books. So the entries are simple. You just need to understand how such bill is being settled and thus pass on the entries in the books of journal, and thus settling the bills receivable and the bills payable accounts. So from the journal, we would be drafting the bills receivable and bills payable account, and such entries would thus form part of those accounts, as in the bills receivable account in the books of drawer and bills payable account in the books of drawing.